Good evening to one and all present here. I welcome you in today's special webinar where Mr. Sunil Damania, CIO Mojo PMS, will analyze the impact of the recent election results on the equity markets, including understanding the immediate and long-term effects on various sectors, identifying investment opportunities and risks in the post-election market environment. Towards the end, we would also be having a Q&A session, so you can post up all your queries, questions in the comment box below. Before I hand it over to Sunil sir, I would like to give all our attendees a reminder. As you are aware, we are celebrating our 9th anniversary, and because of that, we are giving out free 2 years of subscription upon availing the Mojo one-year plan, which is a 83% discounted rate. Yes, you heard that right. By paying just 24,999 for 1 year, you are getting 2 years of validity free, and only for webinar attendees, we are also giving 3 months free access to InfinHub, which is our global stock research platform. So please note, this offer is going to end this week and prices are going to increase. So make sure you're not missing out on this opportunity. Avail the offer now, and also you can avail it multiple times. Now coming back to the webinar topic, I'll hand it over to you, Sunil sir.
Thanks a lot, and what an election outcome. Who would have thought that yesterday market was cheering exit poll, clearly giving a mandate of BJP likely to get more than 350, the NDA more than 400 number of seats. And today, the picture is quite different. And what happened because of that? We have seen a heavy crack India across all the indices. We lost near about 2 Reliance Industries market cap, 2 times Reliance Industries market cap in single day. More than 40 lakh crore have been lost in terms of market cap in a single day. That's a very substantial fall that has happened. Remember, this kind of fall we have not seen post-COVID. So those investors who have come to the market post-COVID have not seen market cracking by more than 5% in a single day. 2020 में हुआ था, ये 2024 चल रहा है, and we have not seen last 4 years. We have not seen this kind of a crack. So what do we need to do now? That's the biggest question that everyone. So what I've done, I have preempted certain questions which are bothering investors. I have listed down those questions, and I'm trying to answer those questions. For some reason, there are some questions which I have still not been able to address, and I have not been able to preempt it. Please feel free to ask me and I'll be more than happy to answer. Remember, in today's webinar, there is no time limit. Till we exhaust with all the questions, we will continue with this webinar. Please clarify all your doubts, okay? And we will not stop till we answer all the questions. But before I begin, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. Past performance is no indicator of future returns, and investment securities market are subject to market risk. Now, if you look at it, what are the questions that I'm going to cover today? Should you use dip in the market to put more money? What is the downside, further downside to this market? When to start more money in the market? And if at all you have to put it, should you put in lump sum or a staggered manner? Should you rebalance your portfolio? How soon the market can recover from today's fall? What happens to PH2 stocks and Adani Group? I've said, but I'm not going to discuss about that. Which sectors will perform well and which one will not? Will FII come back? And what would be their strategy post-election? Is India growth story punctured because of NDA not getting or BJP not getting a clear-cut majority? Should you put money in mid and small cap? They've cracked substantially today. Should you book losses? And last but not the least, can Modi be the Prime Minister for 3rd time in a row? I'm going to address each and every question in a detailed manner in my webinar. But just let's look at exit poll versus actual numbers. And these numbers I've updated till 6:30 p.m. So there will be some change. But don't expect major change now. Because many round of elections already over, counting is over. Now don't expect major change in the overall picture of what I am presenting right now. There may be 1 or 2 seats here and there, but don't expect much of a change. Now, if you look at the average of NDA was supposed to get in expert exit poll was 365. Actual came at 294, which is 20% off the mark. And that happened purely because of overestimate what happened in Uttar Pradesh. Samajwadi Party extremely gave a tough fight to BJP. Maharashtra is one place where the complete NDA have been a poor show. Some of the like West Bengal, where it was expected to win more number of seats, has not been able to do that, and that clearly explained why NDA is fallen by 20% as compared to average. On the other hand, India Alliance projected was 146 average. They got 231. The 59% positive surprise. And that's a big, remember on Saturday when I came in front of you, I did mention that normally exit polls are actually predicting the real number. But for a change, it has been a massive shock for the market and for me also. I'll be very honest with you. I was not expecting this kind of numbers to come out. But we have to accept the reality, that's a fact of life. And then you need to revise your strategy based on the new data points comes in our front of us. This market really surprised everyone, and you know what happened today. Across the board, there has been selling pressure except FMCG, which is up by 1%. And I'll explain why. But mid-cap in a day fallen by 8.1%, small cap 6.8%, and Nifty and Sensex 6%. As I was explaining you, not very often you see Sensex and Nifty falling by 5% in a single day. Last it happened in 2020. 4 साल के बाद पहली बार Nifty और Sensex 5% से more गिरे हुए हैं. But look at the PSU bank, 15.1% in a single day. Normally it take 1 year to gain this kind of a gain. The Rome was not built in a day, but Hiroshima and Nagasaki was destroyed in few hours. That's something which happens. So when सैलाब आता है, बाढ़ आती है, it takes away a lot of stuff, and that's what exactly happened today. Nifty energy down by 12%, Nifty metal down by 10.6%. There are 5-6 sectors, which basically went down at double digits in a single day, and that's been a massive wealth erosion that took place. But that's the beauty about the market. Kabhi khushi, kabhi gum. Now, if you look at the historical trend, how the market behaved, before I start answering all the questions that I put up in my first slide, this is not the first time on the election day the market went down. It happened in 2019 also. If you look at it, it went down by 1.45%. So if you look at it in 2019, on the what we call exit poll, market went up by 3.69%. But it went close in negative on the election day. In overall gain from the pre-election, pre-exit poll to this was 2.19. This time something similar happened. But the similarity is that the fall has been much higher than the gain that we saw. Now if you look at the market is not very substantial. It's only 3% down from 1st June level, when the exit poll was, the election got over. The exit poll got announced, and on 3rd June, the market reacted to that. So market, despite falling by 6%, month to date is only down by 3%. It's not that it is down substantially, but the fact of the life is the market is down by 3%. If you look at it, the post-exit, post-election, market has moved in a range of +3 to -3. And which clearly shows here. Am I right? Now, if you remember, the last time when the exit poll came contrary to the expectation, like in the sense, market was behaving, expecting NDA to come back, and the numbers fell short of that. So in 2004, and of course I'm not comparing 2004 with 2024 for the very simple reason, this time NDA does have a majority, which was not the case in the 2004. But anyway, what happened at that point of time? How the market basically behaved in 2004. And in fact, on Saturday, someone had asked me, don't you think that's India signing kind of a scenario which can happen? And I did give an answer. I don't expect that to happen. And even I had asked similar question to Rajdeep Sardesai when I met him in Feb or March, and he also suggested no at that point of time. So let's look at what happened in 2004 when the market behaved, or the election outcome was expected in the favor of NDA and did not come in this one. So let's look at what happened. Post 7 days of the numbers, market was down 9%, Sensex was down almost double digit, Nifty 50. Post 15 days, minus 8%, and post 1 month, 12%. But across the board, it was a sea of red ink. In other words, the market did not like this happen. So will the market behave very similar to what happened in 2004? Will that happen? I'll try to answer that too. So let me start now with the question that bothers everyone. And please feel free to put your question. As I told you, I have tried to answer some of the questions which came in my mind and which I want to do that. I must tell you that despite my portfolio is substantially down today, my personal portfolio also, the first thought that came to me, should I put more money or not? And I'll be very honest with you, I did get tempted to. I did not invest for some reason, but I was tempted to invest more money into the market. So what is the downside risk to the market? If you go back to our prediction, which we made in January 2024, we do believe Nifty has a scope to come down to 19,000 level. We have not changed our view when the market was doing well. We are not changing our view when the market has fallen. In other words, from today's level, still there is a scope for market to go down by 11 to 12%. Whether it happens in 2 days, whether it happens in 1 month, we don't know. But that could be a possibility of 19,000. One of the reasons is very simple, purely because of the valuations. And I'm going to put this matrix in front of you in terms of valuations. Number one, what is the trailing 12 months price to earning index is commanding despite today's fall, where we lost near about 40 lakh crore in a single day in terms of market cap and in terms of market cap to GDP. So our sense, we are not changing our view. Nifty can go down to 19,000, which we stated during good days also, and we are maintaining the same during bad days also. In other words, there is still a scope of market to go down by 11 to 12% from the present level. So the question comes, when should you start putting more money? Should you wait for the market to go down to 19,000? See, equity is never about one-day price movement. It's all about long-term wealth creation. And now, if you try to time the market, practically not possible. मंदी में किसको invest नहीं करता है, तेजी में सबको invest करना करता है. And yesterday I was thinking of putting one. So yesterday when I was making the presentation, my presentation was completely different presentation in terms of content. And one of the slide I had put it, be fearful when others are greedy, of Warren Buffett. Of course, I had to remove that because market has become fearful. So now, is it a time to become a greedy? Answer is yes. So the question that, should you start putting money? Please add more money to the equity if you have money. Don't wait for the Nifty to touch 19,000. You can't do that time to the perfection. Then question comes, if I'm saying yes, then should you invest in lump sum or staggered investment? If I'm asking you to put money, as I was telling you, even I'm got tempted to put money and I'll put money. Remember, maybe tomorrow or day after tomorrow, based on my liquidity. But should you put money in lump sum or staggered? Our sense is that you should not put in a lump sum. Please put that money in a staggered manner. I'll tell you what we are doing. So those who are PMS customer would have seen that we have actively did profit booking in last 1 week. So we were doing profit booking previously also. We accelerated that profit booking criteria in an accelerated manner. So many of our PMS customers would have seen that we have done profit booking, active profit booking. Why we did that? Because we were expecting market to correct. At the same time, we did not redeploy that funds after booking profit. What we have done, we are reinvesting that profit in a staggered manner. In the meantime, we started investing in a liquid funds so that our funds can remain in a liquid funds in our PMS, which can earn some interest also when the markets are volatile. But having said that, tomorrow we are investing some portion of our money, which we have put aside, we are putting that money in the equity market, some portion, not all money. I would request you to please put some money in the money again back in the market. So please invest in staggered manner. And we have defined certain levels of the Nifty 50 to put that money, what percentage at the level we are going to put that money in the PMS. Then what, even if it falls further, what happens? If it goes up, for example, then how much we are going to invest and so on and so forth. So we have defined that in a formula. That formula has been put in the system to basically work that way. And something similar, I would request you to please do not run away from the market. Please put your money in the equity market in a staggered manner. If you are a really weak-hearted, don't look at the portfolio daily basis. In fact, today morning I had a one-to-one interaction with one of our PMS customers, and I explained the same thing. Do not basically look at the portfolio. In fact, I said time and again, don't look at the portfolio because probability is very high that you will get emotionally you might get credit, you might get fearful, and you will do that. I'm very happy the maturity of our investors. Today, few investors in our PMS told us and said, we want to invest today. Can you park the funds today? And we said, yes, we can do the funds park today. And that's this level of maturity that we are seeing. That's it. So yes, please invest. We do expect market to go further down from this level. We are not saying no, but do not try to time the market. We have started. We are going to invest tomorrow some portion of our money, which is lying in cash, to redeploy that. As I told you, we did active profit booking. We did not reinvest that profit booking. Tomorrow, some portion of that, we are going to invest in the market. Another question that comes to mind, should you rebalance your portfolio now in today's fall? When on one day, if the PSU bank goes down by 15%, metal companies goes down by 10%, some of the defense stocks are down by 20%, and someone was asking me, why are you not investing in defense and railway stocks? If you remember that in one of the webinars, I think most probably on Friday, if my memory serves me right. And we did mention, it's not that we don't have exposure to defense stocks, but there are certain defense stocks which we believe we should be investing in, but the right time. So question comes, should you rebalance your portfolio? The answer is, what kind of portfolio do you have? If you are playing on momentum, please stay away from momentum story now. It's going to underperform for quite some time. Our sense is that risk-on strategy has taken a backseat. In other words, no longer the story of momentum is going to play out. And I'll come back to you which sectors looks very promising if the risk-on strategy is not there. So right now, if your portfolio consists of a risk-on strategy kind of a portfolio, please rebalance your portfolio. It is a good wake-up call for you to rebalance your portfolio. If you don't know what to do, please come to us. In the PMS, we will help you to do that. But you need to rebalance your portfolio. Story is gone of momentum now. Am I right? How soon market can recover from today's fall? Now that's a very interesting question, and we all go by what the history suggests. Am I right? As I was explaining you, not many occasions the market falls by more than 5%. Before COVID hit us, it happened on August 2015, when the Nifty fell by 6%, and it took 63 days to recover. That is almost 2 months to recover. If you go back to the, when the COVID hit us, there are many occasions, which market basically fell on a continuous by 5%. And our sense is that, and of course, the period vary from 137 days to 113 days, and so on and so forth. Our sense is that it should take me about 21 days to recover today's fall. So what we mean by is that what was the yesterday's closing, it may take me about 21 days to recover, go to that level. Doesn't mean that market will may not fall from that level. It can again fall, or it may remain at that level for substantial period of time. What happens to PSU stocks? Should you get out? Should you book profit? Should you less get this one? Our base case scenario, and we can go 100% wrong, remember that. Our base case scenario is that NDA should form the government. Why? Because opposition does not have the halfway mark. Despite they did well, they still don't have a mandate to form the government unless some of the NDA partners decide to part way and join the opposition. But in that case, then it's a very fragile kind of a government. Now, if the NDA continues to be the ruling the government with help of his ally partners, I think reforms at the PSU should continue. Okay. Only debate is what is the pace of reforms. For example, if someone gets a railway ministry from the ally partners and that guy who is a minister is not so pro reforms, then it's a different story. If someone get a Ministry of Defense and from the alliance partners and that guy is not so active, then it's a different story. But reforms will continue. So our base case scenario that should you get out of PSU stocks? The answer is no. Should you basically get into the PSU stocks at this? We do believe you will get at the appropriate. As I was explaining you, we do want to invest in railway stocks. We do want to invest in some of the defense stocks within the PSU pack, and we will invest at the appropriate time. But no need to get out of the panic of the PSU stocks. Yeah, there are certain stocks which are running ahead of the fundamentals. I don't want to name them. We wanted to invest, we never invested in those companies. And today they are down by 25% in a single day. So that's it. So that's why the valuations are a little concerned. Please stay away from that. But otherwise, PSU as a pack, is it a cause of concern? Answer is no. Should you trim down your position? Answer is no. We do own PSU banks and PSU defense stocks in our portfolio. We have not trimmed till now. Now the question comes, अगर पैसा लगाना है, which आप बता रहे हो, तो which sectors to डालना है, and which one we should avoid. Okay. So our sense is that IT, pharma and FMCG should be defensive play in the volatile market. Today we all know that FMCG like Hindustan Unilever was up by 5%. Am I right? Now that's normally don't see Hindustan Unilever moving up by 5% when the market is down by 5%, and which is actually part of Sensex and Nifty. Pharma is also shown a lot of resilience in IT. Why is that so? Because these stories are more structural in the nature. IT because of not much dependent on domestic but more dependent on the global. Pharma, again, there is a shortage of generics in the US, and domestic formulation business is also doing reasonably well, so that should do well. FMCG on the hope of good monsoon or more money in the hands of the end. And of course, there is a fair possibility this time that there could be a reduction in the personal income. Because that happens, the disposable income goes up, and that happens, FMCG companies should do well. So our sense is that please take a reshuffle portfolio in case if you wish to do reshuffle, and take shelter in IT, pharma and FMCG if you don't have the exposure. Over medium term, defense and railway theme continues to should play very well, purely because we do believe that NDA will be able to retain the power, and if that is so, their reforms will continue. But stay away from the realty sector. Why? Because there is an uncertainty, and uncertainty, when there is a risk-off strategy, realty sector does not do well. So try to rebalance your portfolio with some stocks from pharma, which we do own in our PMS also, FMCG and the IT. That's the way you should be going ahead with this. That's how you should be rebalancing your portfolio. How will FPI will behave post-election? How are they looking at this election? So if you look at the FPI behavior they have been basically selling left, right and center in 2024. They were not waiting for the election outcome to come and take a call. I think they were actually locking in profits purely because of they had concerns, and they have concerns as far as the valuations are concerned. And if you go back to our prediction of January 2024 about FPI inflow, we did mention that it's going to remain muted in 2024. And I believe that's been the case purely because I don't think they are basically too much worried about the election outcome as such. Of course, they will wait who will be the Prime Minister, who will be the what kind of portfolio get allocated to the, in terms of, to decide how much money they can put in or how slow they can go in pumping money, kind of a stuff. But despite what happens to the, who forms the government, who gets the what ministry portfolio, do not expect too much inflow from FPI in 2024. We believe they will remain muted in the rest of 2024. This is despite the fact that we are saying NDA is going to form the government. Okay, so this is what I'm saying. Despite NDA, that's a base case scenario. Do not expect FPI to put in lot of money. In other words, it's all depend upon how mature or sensible our retail investors are behaving. If they behave in a more sensible manner, then whether FPI get out or get in hardly matters to the market. Now the story comes, this election numbers. India has been one of the fastest growing economies in the world. We all know the data that came out in the last day of the May, last week, that is. Super duper growth for the quarter fourth. No one expected. In fact, it was expected fourth less than 7% GDP growth, and we exceeded the 7% growth. So is the India's growth story punctured? The answer is no. We don't believe India's story is punctured because of this election outcome. India, the momentum is with India, and we should do very well. Yes, growth can come down. I must tell you that also. It is not that the story punctured. Growth may come down provided is a coalition politics to slow down the reform, then there is a danger that we can run into. See, today, still the election is not yet over. The counting is not yet over. So a lot of permutation and combination will get explored. Am I right? And it's all function of that. But long-term growth story of India doesn't look back. There are a lot of benefits that India continues to have and will continue to reap that benefits irrespective of who forms the government. Am I right? So, yes, there could be a slowdown in terms of growth, but is it the story punctured? Answer is no. Maybe we grew at 9 point something in FY 2024 in nominal GDP growth, I'm talking about. We may grow at 8.5% nominal if this coalition politics doesn't work out the way it should work out. But are we saying that it's going to grow at 5% nominal GDP? The answer is clearly no. Now that's a big question. Should you put more money into the mid and small cap? They have taken a huge beating today, much bigger than the large cap. If you go back over time and again, we have come in front of you and said that in our PMS, we have substantially reduced our exposure to the, so we don't have a small cap, and we have reduced substantially our exposure in mid cap. 90% we are exposed to the large cap. And why we did that? Purely because we did have a concern at that point of time, mid and small cap, many companies were running ahead of the fundamentals. Has the froth gone away? Answer is no. The froth is clearly not gone away. And hence, we should expect more pain in the mid and small cap. Today, many of the investors would have taken, there would be mark-to-market loss. And there is a fair possibility that tomorrow, that if they are not able to recoup that mark-to-market loss, the broker is going to basically square off the position. So our sense is that mid and small cap may, and there are many of the mid and small cap running ahead of the fundamentals. I think they may continue to underperform going forward. So be careful what mid and small cap we are getting into. As I told you, I'll tell you what I am doing in my PMS portfolio. And that give you a conviction level why we are doing that. Our sense is that mid and small cap may continue to underperform. Be selective in terms of a mid and small cap. If at all you do take a shelter, please take shelter in large cap. I did mention about IT, I did mention pharma, I did mention about FMCG. These sectors do consist of a large caps companies. Good quality name, maybe you can take shelter there. Another question, should I book losses now? If the market is going to bounce back in next 21 days or not, should I book losses or not? The answer is it all depends upon what stocks you are holding in the portfolio. If you are holding momentum stocks, maybe it's not a bad idea to book losses. If you're holding stocks which are running ahead of the fundamentals, please book, get out of that company, whether profit or loss. Because वो sustain नहीं कर पाएगा. Am I right? So be careful with that. Okay. If you have to book losses, have a guts to book losses, because booking loss is the most difficult thing I have come across with the retail investors. They're extremely poor in terms of the strategy to book when it comes to booking losses. दिल पे आ जाती है उनकी. How can I book losses? And sometimes we live in eternal hope कि ये कंपनी पैसा बना के जाएगी. I know some of our customers still own Vaibhav Global and Lux Industries. Both were stock of the month. We closed the call, both the call, long back. And I still come across, अरे साहब पैसा डूब रहा है, कैसे अभी book loss करें? Their losses are increasing, unfortunately. That's the only, and what happened after we exit, we reinvested that amount in some other companies. They have done well. So that's point. Have a guts to. So suppose, relook at your portfolio in a very minute manner. Gone are those days of making easy money, which we have been stating since 2000, beginning of 2024. हमने आप लोग को बार बार बोला है कि don't expect the kind of money you made in 2023 you are going to make in 2024. 2024 will be a difficult year to make money, but it's going to make a nice base for next leg of rally to happen. Am I right? It's going to lay a very strong foundation for the next leg of rally. Now, this is the most critical question everyone is bothering. Can Modi be the Prime Minister third time in a row? Our sense is that since NDA is going to be the power, answer is yes. Very simple reason. NDA still is in majority, 294. They need 272. While if you look at the opposition, they have 231 seats. They're still sort of 41 numbers, stock. To form at least the majority, forget about the crossing the majority. So right now, yes, market has become a little fearful because of the expectation was a little high and did not come. But there is a high probability Modi will become a Prime Minister third time in a row. But remember, in politics, 1 hour is also a very long period. Someone was making a statement to me, what happens if Congress offered Deputy Prime Ministership to TDB and to अपना JDU, Nitish Kumar? Will they shift their alliance from the ND or not? These are all the possibilities. Remember, this is the first time opposition has got some chance to take on BJP. And they will try to see how they can stop BJP forming the government, NDA forming the government. So at the same time, BJP will also make see that how they retain the power. But this is the first time opposition at least have a chance to give a tough fight to the BJP. So that's very possible that you could see some jod tod ki rajniti in the next few days. But our base case is that despite the jod tod ki rajniti, Modi should be able to retain the power. Okay, so that's the base case scenario that we are going into. Now, having said that, remember this slide I had made yesterday. Despite I was not aware that this shock will come. Valuations are very, very rich in India, and I've taken today's valuations. Not yesterday. There was some different picture. If I had taken yesterday, the India's trailing 12 months PE was instead of 25, 29 चल रहा था. एक ही दिन में 4% का गिरावट आ गया. 395 lakh crore market cap, 16 lakh crore net profit of FY 2024. Despite today's fall, we are trading at a rich valuations, 25x. If you look at the market cap to GDP, yesterday we were at 140, today at 134. Still we are not cheap valuations. Even from, so price to earning देख लीजिए, market cap to GDP ratio देख लीजिए, we are in a very rich valuation territory. And I think that's one of the reasons we believe there could be further downside risk of about 11 to 12% in the market. And that's the reason we are suggesting you to go in a staggered manner. That's the reason we are saying go for a defensive play, so that even if the market has to fall, your portfolio will not fall. And on the contrary, sometimes when the overall market falls, some of your portfolio may move up. Why? Because you have taken a defensive play in terms to defend it, like what happened to the Hindustan Unilever. What was the immediate focus of the market now? Immediate focus will be the next Prime Minister and the Finance Minister. And I think market will very closely watch. They will look at day by day and minutes by minute what's happening at this. देखो ये जोड़ तोड़ की राजनीति होने वाली है. Whether we like it or not, that's going to be there. Because the first time opposition has some way to form the government, and they would not like to let go this opportunity. So if they can see that, if they can break the ND alliance, and if they basically able to do that, they will not let go this opportunity. If they do that, I think there's a waste opportunity, because then, next time, basically we don't know what's going to happen. So I think that's a very, very critical that how opposition basically play their cards. Okay, it doesn't mean that ND will allow that to happen. The BJP will allow that to happen, but that's the thing. So I think market will closely watch who the next Prime Minister and the Finance Minister. RBI is going to announce the monetary policy on 7th June. That's on coming Friday. In next 3 days, RBI, and the next week FOMC is going to come out with its decision. In both the cases, our sense is that no rate cut. But election is over. Now the worry about who could be this, but the budget is going to be coming in the first week or second week of July. And market will again go into that mode of budget mein kya aayega. And one Damocles sword, we can call it, is capital gain change. Do they tweak? They don't tweak. And that's going to, again, the market is going to go back to that. So 2-3 दिन election outcome के ऊपर market will get concerned, and then it will shift to what will happen in the budget. So I think the speculation about the budget will gather momentum today's Tuesday. So maybe by next Monday, people start talking about budget में क्या होगा, क्या नहीं होगा. So with this, I've done with my presentation. Please feel free to ask any question that you believe you want to know. Do not hesitate to ask tough questions. I'll be more than happy to answer those.
So starting off with the first question for today, this is from Mr. Durganugar. Election results have triggered the fall of Sensex. Will it continue till the proper valuations are attained?
Yes, sir. That's what we believe, and that's exactly what I've mentioned in my webinar, in my presentation also. There are valuations concerns. So had the market gone up today, it would have made the market more, rich in terms of valuations. And hence, always when the valuations run little ahead of the fundamentals, the downside risk becomes more prominent, more pronounced. So you are right, absolutely. There is corrections will continue till the valuations are reached at a very reasonable level.
So this is from Mr. Kumar. Good evening, Mr. Sunil. Your analysis was to shift to large cap. In fact, mostly I did so. Do you think it would be better to exit before election results and re-enter this week?
No. Election result तो आ गया सर. अभी क्या कुमार सर, अभी तो मैं समझ नहीं पाया सवाल ही आपका. I don't know what your sir. Result has come, market has fallen, so I don't know. Is this the today's question? Mehtab?
Yes, sir. It's today's only.
Sir, election result आ चुका है. NDA is majority, but BJP is not getting a majority, and that's one of the reasons market has corrected today. We did mention in my presentation what should be your strategy in the market, Kumar sir.
So this is from Ms. Jyoti. Good evening, Sunil sir. The election results had already been factored. Still, this dip has surprised everyone. Can we look at new investment avenues at this point, or do we wait for the government to be formed?
So Jyoti sir, you should never invest for an event like this. The election result is out. In fact, that market has been debating on this election for last 6 to 7 months. It's over now. That matter is over. So market will go back to the valuation, will go with the geopolitical situation, they will go back to the Indian earnings and so on and so forth. I think when you say new investment avenues, you mean to say new sectors? The answer is yes, you should explore that. But remember that the play on defense will continue to play well out. Play on railway will continue to play out very well. IT, pharma and FMCG should reasonably do well purely because of defensive play in the market. But should you get out of the market? The answer is no. Am I sold a single share today? The answer is no. Am I going to buy tomorrow? Most probably answer is yes. Am I going to buy day after tomorrow? The answer is most probably yes. We are buying tomorrow in our PMS also. I must tell you that also.
So this is from Mr. Jacob. Good to note that Sunil is believing in India's story, even if it's not Modi-dominated government. What's your Nifty FY25 end target if it's a coalition government by any other PM?
So I don't have a target for FY 2025 right now. I'm not calculated also. For the very simple reason, normally I do this exercise in the beginning of the year. And you all know that what is our target. We have given the range for Nifty 50 by end of 2024, which is very closer to your FY 2025. So our sense was that near about 22,000 can be the Nifty 50 by December 2024 or 20,000. That's the range that we have given when we predicted in January 2024. So that's the target that we are running right now. We do believe that Nifty can have a possibility of going down to 19,000, and by end of December, the range is near about 20,000 to 22,000. This is end of December 2024. That's for Nifty 50.
So this is from Mr. Rahul. Has the time come to start investing in small cap stocks?
No, sir. I did mention that we do see some pains in small cap. We were actually have the maximum exposure in small cap in our PMS. And somewhere in the month of Feb or March, we basically moved away from small and mid cap and moved to the large cap. Why? Because we did realize that the valuations are a little frothy and from risk reward was not in the favor of reward. So we exited from that. So we do believe there is a more pain in the small cap. I don't think it's a time to get into. And I'm saying in general, there will be few stocks here and there, but doesn't make sense to basically invest in small cap at this point of time. In terms of assets allocation, I don't think you should expose too much.
So this is from Mr. Arun. Hi Sunil, does market continue to fall or any chance of quick recovery in short term? If yes, when is the right time to add additional funds into market?
Sir, you should basically invest in, as I told you, I am also doing it immediately. I am also going to invest tomorrow. In our PMS also we are investing tomorrow. Just some portion. We are not saying we are going to invest in a full. We are investing in a staggered manner. And how quick recovery? I said that 21 days it may take to recover the level that we had seen yesterday. So that's what we are saying right now. Our downside target to the Nifty 50 still remains at 19,000.
So this is from Ms. Reena. Sir, during high volatile period, I prefer to move in ETF fund. What do you suggest?
It's all depending upon which ETF you are picking and choosing. If you are looking at Nifty 50, that's fine. There's nothing wrong with that. But if you are looking at some sectoral theme, then you need to be very, very careful about what kind of exposure you are taking, because that sector may or may not perform like what we saw today. In single day, PSU Bank index is down by 15%. Now, and that's too big a loss. In fact, I would expect 15% return in a year. Am I right? And getting wiped out in a single day is too much. But Nifty 50, I think it makes a lot of sense.
So this is from Mr. Sheth. Should we stagger investment in PSU banks?
You can actually. There is no. Yes, you can definitely do that. There is nothing wrong with that. Just be careful about which PSU bank you get into. That's the only thing. But in general, our view on the PSU bank is not negative.
So this is from Mr. Mayur. Hello sir, good evening. As of now, what is your outlook on Nifty levels of this year?
Sorry, what is my outlook on?
Nifty levels for this year.
I just mentioned, Mayur sir, that we do expect by December 2024, the Nifty with somewhere in the range of 20 to 22,000. That's the range that we are. And this is the same range which I suggested in January 2024. Do we need to change our view right now? I don't think. The new data point doesn't suggest that we need to change our view.
So this is from Mr. Sudhakar. Hi Sunil, you say market will double by 2029 and on the other hand you say anything can happen in the next 3 months. How to correlate both these statements?
Sudhakar sir, there are views on short term, there are views on long run. Am I right? One should not get confused with the short run, this and long run. Short term looks a little challenging, and this is not I'm saying today. I've been saying from January 2024 that this is not the year you can make money. This is the year where market will consolidate and will make nice base for the future leg of rally. So short term looks a little challenging. The long term looks extremely good. Are we changing our view on Nifty 50 or Sensex doubling by 2029? Answer is no. We do believe that is India's growth story punctured. The answer is no. Okay, as I mentioned very clearly, yes, short term looks challenging, but long term looks extremely good. Nothing. I am going to put more money to the equity, as I said. Why? Because I do believe that India's growth story is very much in. If that is so, we will see the market doubling from this level. There is no change in that opinion because of one day price movement.
So this is from Mr. Ashfaq. Is it good to buy automobile shares after market down 10-12%?
Yes, you can actually. Ashfaq, I have mentioned about that in my Friday webinar also for future trend. Look at for those companies within the auto which are gaining market share. The market loves those companies which gain market share. Market don't like companies which are losing market share. And I did present it in my webinar which companies are gaining market share. That gives a good hint what you should be doing there.
So this is from Mr. Anup. Has market overreacted to election results or is it more of a sell on news due to high valuation?
Anupji, it's again, there's a very famous saying, buy on rumors, sell on news. So I'll give you a very classical thing what happened, So Joyson basically messaged me on Sunday because exit poll had come and everything has happened. What is our market view? He asked me on Sunday morning. My reply was market will open with gap up on Monday, but market will now start focusing on valuations and geopolitical issue. So he said, okay, correction expected, and my answer was yes. Okay, that is I'm talking about Sunday. This is the thing. So yes, I don't think it's came out of blue. It was expected. There has to be some reason for market to correct because you can't sustain these valuations, such a high valuation. And I think this election result has given a reason for market to go down. That's a fair thing. Nothing worrisome as such. And has it overreacted? My answer is no. I don't think this is an overreaction. That's a normal reaction.
So this is from Mr. Bharat. Should I book profit? I have substantial profit in my portfolio as I have been investing since 2019.
So Bharat sir, what you should be doing is that look at the company that you are holding and it deserves to be locking in profits, please do that. So I always tell profit booking should never be function of your view on the market. Profit booking should be function of your view on the company. Because if the company is going to do well, why should you basically book profit? I'll give you a classical example. There is one stock in my portfolio, today is up by 5%. Has the thought of booking profit came to me? Answer is no. Because the story remains same. Am I right? So profit booking should be your view on the company. Is it changed or not because of this election result? Logically, one should not. Am I right? Because the fundamental story doesn't change for the company because of election result. It's only the sentiment has gone little sour. That's it. It has gone little soft. That's it. So I don't think so you should do that. But if you think that story for which I bought this company is not going to play out now going forward, then definitely book profit or the loss as the case may be.
So this is from Mr. Bala. Dear Sunil sir, thanks for giving a clarity on the road ahead. Please explain market cap to GDP ratio. Could you please elaborate on the same? How do you calculate and what is the best ratio to invest in?
Okay, so can you see my screen if you do? So India's market cap, we all know it's available on BSE India website or NSE site, today is 395 lakh crore. Okay. What is GDP? This is a nominal GDP I've taken, and I've taken this data from the PIB, Press Information Bureau, when they announced this Q4 GDP, that they also given the nominal GDP of India at 295 lakh crore. Now, if you look at the historically, market to GDP ratio has been propagated by Warren Buffett. Normally, they say that if anything goes above 100, then it's a little danger sign. Okay, but there are countries like US and Japan which commands more than 100, and they've been able to sustain it longer, this one thing also, over a longer period of time, above 100 also. India's 10 years average is near about 85%. So we are trading substantial premium to the what we have been commanding. If you look at and you know, normally we compare India with China. China, during the best of the time when the economic growth was at the boom, China commanded market cap GDP at 120% maximum. We are still commanding at 134. So my sense is that we should, if 100 is fine because we are growing economy. Had it not been growing economy, I would have preferred less than 100. Am I right? So that's what my sense is, that which is the best ratio to invest. I think about 100 it should be the best ratio to invest. So there are two things which can happen now. Coming back to this, your GDP number can grow and market cap remain the same. That can help to bring down the market GDP. Another thing could be that market cap falls substantially, and that helps to bring down the GDP to 100 or so. GDP market cap GDP ratio to 100 or so. Now, I'm not saying 100 is a very sacrosanct, It could be 105 also, and could be 95 also. But that's how we should look at it. So I hope that it basically help you understand. It does gives in whether there is a growth in the overall market or not. The market GDP ratio signifies that this ratio has been propagated by Warren Buffett. So if you Google search market GDP ratio plus Warren Buffett, you'll know how Warren Buffett basically talk about this ratio.
So this is from Mr. Venkataraman. 1,000 points recovery from day low on Nifty didn't confirm that the fall today was mere panic.
So I think someone also asked me, is it the panic selling? The answer is no. I think, see, if you look at it, the market, see, कल market 4% ऊपर गया, 2% नीचे, तो net we are only down at 2.5% in first 4-5 days of June. It's not that it's a panic. It's just that market was expecting NDA to get more than 350, 360 seats. BJP getting a clear-cut majority. BJP did not get the clear-cut majority. The NDA alliance has less than 300 seats. And so, I always keep talking about expectation versus the reality. And someone said a very nice thing today, which I really liked it. Today, Congress is celebrating despite they got less than 100 seats. There is no way they should be celebrating it. And today, BJP is still not able to celebrate in a meaningful manner, despite they emerge as the single largest party in this election. So, I keep talking about the expectation as a reality. And I give example of a child. If you're expecting your child to score 95% in exam, if child comes up with 94%, you get dejected. On the other end, you were expecting child to score 80%, and if your child score even 85%, you are super excited. Am I right? So that's a problem with the expectation and the reality. So I don't think it's a panic as such. Yes, the expectation was a little high with BJP, with NDA did not come. And that's how the market behaves. There's something similar happened to results also, not the election result, but then company results. So sometimes you would have seen company result, despite reporting growth, the company's share price comes down in double digits. Why? Because the market was expecting much better numbers, and company could not live up to that expectation, and that's why it has fallen. It's fair. I don't think it's a panic kind of a stuff.
So this is from Mr. Trivedi. If market is overvalued, why to make investment now?
Trivedi sir, that's a beautiful question. You cannot time the market. That's the beauty about this market. So that's the reason we are saying invest in a staggered manner. Because not necessarily the market will listen to Sunil Damania. Na? Zaruri to hai nahi. Suppose market bhag gaya because of whatever the reasons are there. And market has a tendency to trade above valuation or below valuation, the fair valuation, am I right? And it can remain for a longer period of time above the fair valuation and longer period of time below the fair valuation. So what you should do, you should never try to time the market. Invest in a staggered manner. So that basically it helps you. Otherwise, what would happen if market goes up? At least still you are invested. Some portion you are invested, to at least you're making money. If you don't invest and if market falls, suppose if they buy staggered, you fall, the market falls, you still got an opportunity to invest at the lower level. And that's a very more reasonable way to invest in the market. And if I'm so sure that market 19,000 ko jane wala, why am I fool to put all money or my money also tomorrow in the market? The answer is no. Am I right? So even I don't know. We believe it can happen. It may not happen also. That's a fair chance. There is nothing called sure shot, am I right? There are many pundits on Saturday talked about कि किसी ने तो एक कॉन्स्टिट्यूंस के लिए ये बोल दिया था कि किसी ने बोला इसकी हवा चल रही है. And one of the सेफोलॉजिस्ट said हवा ने एसी चल रहा है. And that same candidate actually जिसके फेवर में चल रही थी हवा ने एसी चला था, lost by more than 3 lakh watts. So there is nothing called surety in the market. So that's why I said don't try to time the market. Just invest in a staggered manner. If it happens, it's fine. If it doesn't happen, still you are fine.
So this is from Mr. Chaudhary. Hello, will it not be better to wait till PM name and ministries are finalized before putting our money in the market? Because a lot will depend on allocation of ministries.
So that's a one view you can take and do that. Suppose it happens to be the good prime minister and the good portfolio been given to the good minister. Will you get a chance to invest at that point of time? The answer is no, because market would have immediately reacted to that, isn't it? So then you do run a risk. तभी फिर क्या होगा अगर market 5 तक का भाग गया, for example, then you will not have a guts. You will थोड़ा wait कर लेता, थोड़ा market भाग गया बाद में करेंगे, and that wait can become a forever. So that's why don't try to do it. Don't cut it too fine. That's what my point is. Logically it sounds perfectly right, nothing wrong, but market में logic थोड़ा कम चलता है sir.
So this is from Mr. Atul. Sir, what is a reasonable level for Nifty?
अरे यार मैं बोला ना, we believe that Nifty can go down to 19,000, but not guarantee that it should go to 19,000, and that's the reason we are saying instead of waiting for the right level of Nifty, please invest in staggered manner from tomorrow onwards.
So this is from Mr. Mandat. Sir, hello sir, can we take new entry in railway, defense and power sectors?
Definitely yes, definitely yes. Just look at the valuations as I told you. We also want to take, in fact someone asked me this question on I think Friday or something, I mentioned the same thing. It's not that we don't want to take sector, only thing some of the companies were running little ahead of the fundamental. We wanted to get invested in the right company at the right price. That's what exactly we did that. Yes, definitely answer is yes. There is one power company, even I want to invest. In fact, I wanted to invest and somehow I got busy with some other stuff and I did not, so it slipped my mind, to be very honest with you.
So this is from Mr. Farhan. If a small cap company is fundamentally strong and growing year on year, is it a good decision to get out of it and put the same money in a large cap stock?
No, that's not. If it's fundamentally strong company growing year on year, then why do you want to get out of that company? And then answer is no for answer.
So this is from Mr. Uday. Sir, how to identify if the fall is over?
Sir, has it been so easy, everyone would have become a crorepati in this market. Am I right? So it's not so easy, Uday sir. I think that's why I said don't try to time the market. You cannot invest at the bottom of the price and you cannot get out of at the top of the price. Am I right? It's practically impossible. And hence, please do it in a staggered manner. Sir, सवाल इसका जवाब इतना easy होता तो आपको जरूरत ही नहीं पड़ती किसी expert की. You don't need any fund manager in the world. Everyone would have become an expert and everyone would have invested on their own only.
So this is from Mr. Pradeep.
But I will tell you there are certain anecdotes I can give you. So when the fall, we are very closer to the bottom. There are few things which have happened in the past. And I think that is a good measure to do that. When 9 out of 10 people will come and tell you that market mein mandi hai. When there are more people justify why market can go down. When more people calls up and says, boss, market mujhe paisa nikalna hai, that's the time, right time to understand that we have hit the bottom. And this is the way. So what I do basically for me to find out whether this is or not, I look at the experts who come on the TV channels. If their Ghana is of more of a bullish nature, then I know that market upside is kept. The moment they become fearful, then I'll become greedy. That's the logic. So again, Warren Buffett statement: be greedy when others are fearful. Be fearful when others are greedy. That's how you can identify where the bottom is. वो बोलने के लिए बहुत easy है, पर होता नहीं है real life में.
So this is from Mr. Milan. Can you show the valuation slide again and discuss it?
So you look at this one. There are 2 data points I've seen. Can you see my screen? There are 2 data points I've shown. One is what is the price to earning ratio of India Inc. for trailing 12 months. So, total trailing 12 months net profit of India is 16 lakh crore, mota, okay. The India's market cap today, as of today, despite this fall, is 395 lakh crore. So our trailing 12 months P is 25x, okay. And the other slide which I'll talk about the market cap to GDP. 395 lakh crore, GDP for FY 2024 is 295 lakh crore. I've taken this data 295 lakh crore from the government only. It's not my data. And don't get confused with billion US dollar, because I know one of our investors basically keep writing me, your data is wrong. My data is not wrong. You are getting confused with the trillion and the US trillion and the rupees crore, lakh crore. Okay, so 295 lakh crore is the GDP. So that gives you market for GDP to 134%.
So this is from Mr. Jayant. Hi Sunilji, you've been providing excellent insights. Thanks. How do you see gold and silver ETFs trending now? Is it a good time to enter these now?
So Jayant sir, I again repeat, you should never invest in gold and silver because of you on the gold or silver positive. It should be more of an assets allocation strategy. Put near about 10 to 15% assets allocation strategy. From this level, gold and ETF may not give you super duper returns for rest of 2024. But on an average, they should give you next 5 years near about 11% CAGR, both gold and silver.
This is from Mr. Pradeep. Shall I invest in mutual fund or PMS right now?
Sir, depending upon if you have more than 50 lakhs to invest, please come to PMS. If you have less than 50 lakhs, please go to mutual fund. One thing I can tell you, there is a high probability that we will outperform the mutual fund on a block of 3 to 5 years. That's what our endeavor would be.
This is from Mr. Dhanvat. Was it a prudent thing to book profits yesterday?
In hindsight, yes, sir. Sir, इतना perfection होता है life में, तो आदमी अंबानी से भी आगे निकल जाता था. Yes, in a hindsight, what you are saying is right. But market is not about one day, sir. अगर आपने profit book नहीं भी किया, it's not that it's all gone and this one. This market is a beauty about this market. Every fall, it has bounced back very substantially. And hence, एक बार profit book कर लिया, then the question comes, when do you re-enter the market? वो बहुत difficult होता है. I always keep saying that it's easy to find out where the top of the market is. It's extremely difficult to find out where the bottom of the market is. And that's a very challenging. What I would request, Mahatab, take only those questions are not which I have not answered. Are you getting my point? Because otherwise people will get bored.
Yes, sir. So this is from Mr. Nimesh. Is this a start of bear market, Sunilji?
No, sir. It's not a start of bear market.
So this next question is from Mr. Vineet. Do you see a coalition government will be formed?
It looks like, because there is not a single party which has got the majority. So there is no other choice but to have a coalition government. So, I think this is a no-brainer, this question. Why? Because किसी को majority नहीं है, ना बीजेपी को है, ना कांग्रेस को है, ना किसी और पार्टी को है. There has to be a coalition government.
So this is from Ms. Tanya. Hi Sunil sir, please give your views on small cap and mid cap mutual funds. Should I hold on to them since I've made investment for long term?
No. Then if you made investment for long term, don't disturb your investment strategy. See, eventually mid and small cap will do extremely well. It is just that I don't want the mutual fund. The beauty is that the fund will take a call. If you are holding personally, the script may keep falling and you may not get out of that company. And then the stock become a permanent member of your portfolio. Which that's why I said, when if you're managing on your own, be careful with the mid and small cap. Otherwise, we also in our PMS also, we have stated that somewhere in second half of 2024, we'll again look at the mid and small cap, we'll increase our exposure to mid and small cap. It's not that we are basically shying away from investing in mid and small cap, but appropriate time we will do that.
That's it with the Q&A, sir.
So thanks a lot to everyone taking time out. If you still have some question which bothers you, please do write to us. We'll be trying to help you with that query. Please remember, market job is to create fear. Long-term story of Indian market, irrespective of who forms the government, remains rock solid. Don't invest at one go. Invest in staggered manner. Market is likely to remain volatile. So be it. The 2024, again I repeat, is going to make a nice base for the next leg of rally. With this, thanks everyone taking time out and attending this webinar. Good night, take care, and if you still have a question, do not forget to write to us.